Almost 9 in 10 Middle East workers believe that employee loyalty is tied to higher productivity, but a new survey suggests that loyalty for them is no longer about remaining in the same company for a long period of time. Recruitment website Bait.com surveyed just over 8,000 respondents from the Middle East between November and December this year. Its employee loyalty in the Middle East and North Africa poll found that employee loyalty is among the top success indicators companies look to achieve, while 76.6% of respondents agreed that their managers were interested in having loyal employees. Respondents said the top benefits of employee loyalty included higher efficiency, stronger team relationships, and higher employee satisfaction. The Bait.com poll revealed that 91% of respondents said that they were highly engaged at work, and more than three-quarters, at 79%, said that they were very loyal to their current company. Meanwhile, just over half, at 55.3%, agreed that they were satisfied with the company they work for. However, views of what constitutes loyalty were wide-ranging, with only around 11% saying it meant staying in the same company for many years, while 33% of employees said loyalty means maintaining the company confidentiality, even after resigning. A total of 28% of respondents cited salary as the top factor influencing employee loyalty, while other factors included good management, compensation and benefits, good team members, and strong direct managers. Plane maker Airbus said on Tuesday that it was postponing the delivery of 12 A380 planes to Emirates airline over the next 2 years, and added it would step up cost cuts to minimise the impact of these delays. Airbus, whose main rival is US group Boeing, said 6 deliveries of the A380 would be postponed from 2017 to 2018, with another 6 postponed from 2018 to 2019, following an agreement between Emirates and engine maker Rolls-Royce and a consecutive deal between Airbus and Emirates. Emirates Airline had said in November it was having some unspecified technical issues with Rolls-Royce engines for A380 jets. Airbus, which earlier this month announced a deal to sell 100 jets to Iran Air, reported in October lower than expected third-quarter profits, although it broadly maintained its full-year financial forecasts. Meanwhile, Emirates said on its Twitter feed on Tuesday that it had taken 16 Boeing 777-300ERs in 2016, bringing the total Boeing 777 fleet count to 162. The Dubai-based developer Meydan has raised 1 billion dirhams through a new Islamic financing facility and plans to use it to develop current and future projects, including Meydan 1 at Mohammed bin Rashid City and its project on the banks of the extended Dubai Canal. The funding was arranged by Abu Dhabi Islamic Bank with support from Dubai Islamic Bank and Al Hilal Bank, and it matures in 2018. Follows an earlier 1 billion dirham funding deal announced in June, also through ADIB via a 700 million dirham sukuk and a 300 million dirham term loan, both of which expire in 2024. Meydan recently issued a tender seeking bids from contractors to build the 711-metre tower at Meydan 1 and unveiled more detailed plans for the site's mall, which will contain 529 shops, including an 11,200 square metre hypermarket. The mall and the tower were announced in August 2015 as part of a 5 million square foot project that is also set to contain a marina, a huge civic plaza, an arena, and the world's longest ski slope. The tower, mall, civic plaza, and a 4-kilometre canal are due for completion by 2020. Alongside this, Meydan is part of a joint venture with Miras that is responsible for the development of about 14 million square feet of hospitality, retail, leisure and residential property along the banks of the extended Dubai Canal. The project will have an estimated value of between 30 billion dirhams to 35 billion dirhams. 2017 will be the year of correction, with the first half of next year offering more investment opportunities in the Emirates' real estate sector. That's according to analysis by real estate experts from Allegoria Properties. Property prices in Dubai have fallen between 8 to 12% this year from their 2014 highs, according to data from Dubai Land Department. Despite the drop in transaction values, property experts have stated that 2017 will be the year of opportunities for international investors as well as end buyers. Mahmoud Shihada, managing partner at Allegoria Properties, stated that 2017 will be the year of correction as prices are expected to bottom out, with early signs of recovery and an increase in returns expected to be witnessed in early 2018. According to a year-end report released on Sunday by consultancy FIDO Advisory, a strong US dollar, relatively low oil prices and weak investor demand will help lower housing rents and sales prices in Dubai in 2017. According to FIDO's estimates, quarterly villa sale prices in November increased 5.6%, even as lease rates decreased 1.6%, pushing yields down to 4.6%. Apartment lease rates declined 2.3%, while sale prices were down 0.5%, pushing gross yields down to 7.8%. As the report labelled 2017 as the year for affordable housing, the managing director of Allegoria Properties said that attractive payment plans for off-plan projects, as well as have provided a renewed sense of optimism in the market. It was further added that at present investors can look at capitalising on increased demand for the rental sector, as well as a 2 to 3 year appreciation sale from 2018.
I see 2017, I like to call it the correction year. So 2017 will be the year where the market is stabilizing, investors are starting to get more comfortable with buying properties here in the region, and you won't see any insane jumps in real estate pricing. But you will see the market stabilizing, probably diminishing that 8 to 12%. If I were to take a wild jab at it, I would say probably bringing it down to 4 or 2%, or maybe even going back to par. And then beyond that, I think it's just an upswing all the way up. I could generally see it by 2018, to be honest. 2018 onwards, there should be a very big influx of individuals coming in. There's been a lot of foreign investment here in the region, so that's really helped boost the economy. And to be quite frank with you, with the Expo coming in 2020, it's obviously created a very big boom for the economy, a very big boom for the city as well. They will be spending a lot of money on infrastructure. They will be spending a lot of money to expand the hotspot locations here in the region. So yeah, I would definitely say you're looking at a 2 to 3 year appreciation scale, and you'll be seeing the highest upside as closer that we get to 2020.
According to Mahmoud, demographically, Indians continue to be the biggest investors in Dubai's real estate market, followed by Russians and Saudi Arabia. While cash buyers continue to be the company's main clients, he added that Dubai land will be the next hotspot for investor interests, particularly after the completion of planned infrastructure development. While commenting on the increased investor sentiment with the Expo in 2020, Mahmoud added that improved regulations will continue to play a major role in the long-term sustainability of the Emirates' real estate market.
With RERA's new enforcement of the escrow accounts for every single development, for every individual project that they're building, it's pretty much securitized every dirham invested into any project or any off-plan property. What they've done, just to give you a bit of background on it, is they've registered all the banks here in the UAE to provide a facility for all developers to receive checks on the payment plan structure that they have for their development project, and hold it and monitor where the spending is being put, and it will only be placed for construction. So in the case where the project isn't completed, obviously all the money that's been invested is protected by RERA first and then the bank second. So in the case where a developer decides to pick up and leave, your money is safe and sound in the escrow account. So they've really eliminated all of that scare.